Hi there traders, this is Steve Miley for FX Explained and our regular weekly macro watch roundup of the major geopolitical fundamental events that have impacted on financial markets over the past week, and a look out into the coming week in here starting the 13th of April. So a fear of missing out rally in the stock market has really dominated events in here over the past week. And we've seen significant macroeconomic geopolitical developments in here, which we're going to run through now. So first of all, the death toll in here. We've seen the epicenter really shift to the US and to an extent the UK over the past week, with numbers in Spain and France, Germany, all plateauing, giving some hope in here that maybe in those countries we're over the worst of the COVID-19 spread and the number of deaths in here. But UK and US still very much on the ascendancy, and we're seeing on further rises in there and going into the Easter weekend. But we're looking for those to hopefully start to plateau in the coming weeks. But those numbers in Spain, France, Italy and Germany, all encouraging. And then we move on in here. We have also seen potential for some lockdowns being eased in here across Europe, with Austria, Denmark, Norway and the Czech Republic all looking potentially to ease their lockdowns in coming weeks. Elsewhere, we have seen 17 million now registered in the US as unemployed since the lockdown began in early March, with those jobless claims numbers coming in at 6.6 million over the past week. That data we had from Thursday, just short of the previous week 6.9 million, and the week before that 3.3 million. And there is talk amongst economists out there that they're predicting that the US unemployment rate could already be at 14%, which is way above the peak during the global financial crisis. However, we have had central bank intervention, further central bank intervention, particularly from the US Federal Reserve. They stepped in last week again for both the US and global economy. On Thursday, the Federal Reserve announced new programs aimed at lending as much as $2.3 trillion to businesses, over and above what's already been committed, including a Main Street lending program for small and medium-sized businesses, plus a commitment to buy corporate bonds, both investment grade as well as high-yield junk bonds. These measures on top of the prior initiatives, including cutting interest rates to effectively zero, open-ended asset purchase of bonds and other assets, overnight lending facilities to US banks, and the supply of US dollars via swap lines to global central banks. So this has all helped to bolster and improve the outlook in here from the economic side, and then has allowed stocks to rally, which we'll turn to shortly. On the global political side as well, we've also seen the OPEC Plus meeting finally on Thursday. They did announce production cuts in here, although there were some issues with Mexico agreeing. But nevertheless, production cuts expected for May and June of 10 million barrels per day, which should bolster the oil price, although the oil market was disappointed with oil going lower. And we will look at the G20 agreement over the weekend to see if that can help oil prices going into the coming week. So let's actually look at what happens to the global financial markets. Well, the S&P 500 benefited with a 12.1% advance last week. And remember, that was only in 4 trading days, with markets closed for the Good Friday Easter holiday on Friday. So a 12.1% rally for the S&P 500, its largest weekly advance since 1974. And similarly strong rallies were seen across other US indices, across European averages, and also in Asian stock markets. Elsewhere on the market side, the US dollar has weakened with this more risk-on theme that we've seen, with global stocks rallying, the US dollar, its safe haven position not being required as much. So we've seen a move away from the US dollar, a weakening of the US dollar over the past week, and a strengthening of most other currencies against the US dollar, particularly the risk currencies, the Australian New Zealand dollar, with a strong rebound in the Australian dollar. This weakness in the US dollar has translated into a strengthening of gold and other commodity prices, but gold hitting a new multi-year high, closing on its highs at the end of last week, Thursday, and pointing still higher going into this week from a multi-year high in here for gold. And then in oil, we've already mentioned this, a disappointment. So oil had previously rebounded the prior week, a drop in oil on Friday with disappointment at the production cuts from OPEC. However, we're looking for potential with developments over the weekend within G20 with respect to the oil production, that there's potential for oil to rebound going into the beginning of this week. Let's now take a look ahead into the week commencing the 13th of April and what we've got to watch in this coming week. Well, European and UK markets are still closed for the Easter holiday on Monday the 13th of April, although the US and Asian markets are open in here. We're obviously going to be monitoring the global spread of the coronavirus and looking for those plateauing in Europe to continue that we looked at previously there. In Italy, Spain, Germany, France, and then hopefully to see some kind of slowdown also in the UK and the US as global lockdown measures hopefully impact positively on the spread of COVID-19. We're also going to be looking at maybe the relaxing in other nations of those lockdown measures and potentially the impacts that could have. On the data front, we don't have any really big data in here. We do get various data which we'll look at shortly. However, the jobless claims data is very much in the focus again going into this week. We also have earnings season kicking off in the US, so there's going to be definitely a focus on the earnings season that kicks off, as I say, for the Q1 data. They're going to be watched with interest. Q1 numbers obviously anticipated to be extremely disappointing given global events in February and particularly in March. And we're also going to be watching out for the future guidance for the second quarter. We're definitely going to be watched with interest, although details are understandably likely to be very vague from major corporates. So let's just run through the calendar. Markets in Europe and the UK close for Easter on Monday. US and Asia are open, however. We get Chinese trade data on Tuesday, US retail sales Wednesday, and the Bank of Canada interest rate meeting and decision. Thursday brings the Australian employment report, and then that very much watched right now US jobless claims number, and we end the week off with Chinese GDP and retail sales. I'm going to wish you all a great trading week and stay safe out there, people. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.